Hey folks, welcome to Quantsapp and welcome back to yet another video. So if you want to participate in fast moves that happen in Nifty, Banknifty or any other stock in intraday, then this video is for you. With this video, we are going to understand about option scalping. So in this video, we will learn three different trade setups of option scalping plus one cheat code which I will give you towards the end. So do check out the video till the very end if you want to scalp options better. So let's start off our today's video by understanding open interest based option scalping, how we can look at the options open interest data and how can we scalp options using it. So let me just quickly guide you through what exactly we need to find out. So we all know that option writers, they have heavy stake in the market, and we all know that option writers, we typically look at it from writers perspective, although it has buyers and sellers, but as option sellers have a lot of stake in the market, that's the reason we look at it from writer's perspective. So to start off with, let's keep it very simple that this is where the strike price, where the highest call writers are. So now what happens is a lot of calls have been sold at this strike price. This strike price has highest take from call writers. So a lot of call writers are expecting the stock to take resistance somewhere around this. So let's say what happens is stock moves like this, like this. Okay, not exactly it will happen like this. I'm just trying to explain you. Okay, so stock moves something like this. Now suddenly one fine day, what happens is you see a lot of open interest. Let's say 20% of open interest getting unwinded from the heaviest call strike. Now what happened is that resistance which was there for this stock, it is getting eased off. It is getting broken. How did I know? A lot of call writers are unwinding. What does that tell us? That tells us that there is some kind of panic, that there is some kind of heat that call writers are facing right now, due to which they are unwinding. What might happen? There might be a big move happening in the instrument, right? Because a lot of call writers have started to unwind. A call writers panic is what telling you that there might be an up. So what we need to find out? We need to find out stocks which are in this vicinity, somewhere around the highest call strike, and call writers which are panic, which might give us a big move, a lucrative opportunity to buy options. So how do we find it? Okay, now the question remains, how do we find it? Because there are so many stocks, we can't go ahead and find out. We can look at open interest data, right, one by one, but finding out an idea from 200 stocks, it is impossible. You will definitely miss out an opportunity. What we will use, we will use the tool of option triggers. What is triggers? Triggers helps us in finding out all those stocks where there might be a big move that might happen intraday because of an option breakout. So first let me tell you what is this screen showing us. So this screen is showing us all the strike price with highest call open interest, all the strike price with highest put open interest. So one thing, the moment you enter triggers, you stay ahead of the competition, that you know where the resistance and the support is for all the FNO scripts. So over here, you know that this is your resistance, and over here, you know this is your support. Okay. Now, what you need to find out? You need to find out those stocks which are close to its highest call open interest. For that, there is a filtration known as call difference. What is call difference? The highest call open interest strike price minus the future price. So let's understand it with an example of AB Capital. AB Capital's highest call is where? It is at 130. What is its futures price? Its futures price is 129. What is the difference? Difference is 0.78 percentage. That tells you that ABB's highest call is 0.78 percentage away from its futures price. Okay. How far your highest call is from the futures price, that is shown to us by call difference. And vice versa on the put side. How far your stock is from the highest put strike, that is shown to you by put difference. Now Aarti Industries is 5.13 percentage away from its breakdown, from its support area. Now what we need to find out, let's say if I want to find out a breakout, I will find out it, sorting it down as per call difference. Now you see Glenmark. What would have happened in Glenmark? It is minus 103. Now what does that mean? If you just look at this 420, it is lower as compared to this, which means Glenmark has moved up above its highest call and 11 percentage call writers have unwinded. Now Glenmark might be one of those stocks wherein you see a lot of call writers getting panicked, they are exiting, right? And it has already given a breakout, right? So we might see Glenmark, a call trap happening in Glenmark. So this is how typically you will filter out the stocks. So what you will do, you will just come to triggers, filter out all those stocks which have a very small call difference, okay, a very small call difference, and you will see where the open interest is unwinding. Now, will we pick up PFC? The answer is no, because only 0.7% call writers have unwinded, right? And also why we are not concentrating on DLF or maybe Indigo or maybe HL, because a lot of call writers are still keeping on adding. What we need to do, we need to pick up those stocks where a lot of call writers are unwinding and the stock is in the vicinity of the highest call. So you see Amaraja batteries 601 600 is the highest call strike, 32% open interest unwinding. Same thing can be done for the put side. So look at you can sort it down as per put difference. Okay, so over here you will get to see Gale, you will get to see Dr. Reddy's, you will get to see McDowell. They are very close to its highest put, and a lot of put writers are getting unwinded. So over here, you can use this tool of triggers to filter out the stocks for your breakouts and breakdowns. If the market is trending on the upside, you can find out a breakout. If the market is trending on the downside, you can find out a breakdown. One of gem of a tool, if you want to create a breakout watch list for yourself. And whenever big move happens, those are the stock which will be on your radar list. Now, this was the first way wherein you identify where writers are getting trapped and you create a position accordingly. Second way is where you see that buyers are getting aggressive or sellers are getting aggressive. And the moment you find out, it is very simple, right? It is one of the simplest ways of identifying demand and supply. So the first thing is you want to know how much eager the buyers are and you want to know how much eager the sellers are, because that will tell you that okay, they are convinced with their trade idea. That's the reason they are going ahead and taking the trade. So what we will do, we need to find out that data, how many buyers were convinced and they bought it directly on the ask. That tells us that okay, these buyers, they are not waiting on the limit price, they are not waiting that price will come to them and then their orders will get executed. They are directly going on the ask price and they are buying it. That tells us buyer's conviction, a eager buyer. Second thing, if seller is selling it directly on the bid, he is expecting a fast down move to happen, a breakdown to happen. That is the reason he is not thinking, he is not waiting for any limit price or something. He is directly going ahead and selling it on the bid price. Now, at the end, if I get both of these data points and if I just compare it, I will get a clean demand and supply, which will tell me that, okay, at this point, the buyers were aggressive, at this point, the sellers were aggressive, and I can participate with the winning party. How we will do it? We will do it using charts, order and trade analytics. Over here, this is the setup what we want to create by the end. So let me show you how we will do it. But before that, let me just show you what we need to do exactly. Okay. So first thing, you can use it on 1 minute or maximum up to 5 minutes, because we have scalping options, right? We want to participate in the fast. So don't use it on a very big time frame like an hourly time frame or anything. Okay, 1 minute, 5 minute would be good to go. What we will do, we will go to indicators. So these are indicators based on order book by Quantsapp. So you can use them. But what we are interested for today's session is buyer initiated quantity. Quantities bought by the buyers on the ask price, eager buyer activity कि buyer is convinced, buyer convinced है कि यहाँ से price might move up. Seller initiated quantity, convinced seller, aggressive seller who is selling it directly on the bid. Just hit apply changes. Now you will see at this point how much 42,500 quantities were getting bought on the ask versus 7,000 quantities sold on the bid. What you need to do, just make it visually much more appealing. Okay, that visuals, they give you a lot of clear trades, right? Visuals, as they say, images, they speak louder than 1,000 words. So that's the thing what you need to do. Convert both of these into lines and observe my steps very carefully. Now the moment you convert these things into line, just click on more, move to existing pay number. Okay, now you have two indicators. Just right click, because you have two scales over here. Just right click, merge all the scales into one on the right. Just merge both the scales, and this is where the data is plotted of yours. Now this is one time process, just save it. So next time you open it, you don't need to create the setup, the entire thing again and again. Okay, so automatically it would be plotted. So over here you will see that, okay, if you see just at this moment, Reliance, it started to give an up move and a lot of buyers were buying it on the ask price. Now let's check for Nifty. It works brilliant on Nifty, Bank Nifty, So just look at this. What happened in Nifty? Aggressive sell-off happening. So this is the time you actually hit on, you will go ahead and participate on the sell sides, right? So if you see 936 onwards, a lot of sell-off happened on the bid price, and you see then suddenly some kind of consolidation happening. Then again sellers started to dominate, and the moment buyers started to dominate, right, the markets kept on moving higher. So now what you need to do in this case is you just need to wait where there is huge difference between demand and supply. Whenever you see that okay, a lot of sellers are selling it, that happened at this point, you need to go ahead and sell it. And the moment you see a lot of buyers are buying it, you need to again go ahead and need to buy it. Okay, so now 3 steps I will give you which will help you in trading these, I would say, this trade setup very much better. First thing is wait for consolidation, and then if there is a breakout and buyers are buying it aggressively, that breakout, then you participate. If you see a breakdown and sellers are selling it aggressively, then you participate. Again, don't trade everything. You will wait for consolidation and then wait for a breakdown to happen. Okay. And for reversals, you will see that okay, if the buyers are buying it aggressively on a reversal, you will again trade it. If there is a lot of up move happened already in the market and then you see sell off happening, then you again sell it. So basically, you are not forming any direction for tomorrow, but the moment you see whichever party is winning, you participate along with those exits. You use your trailing stop losses, then you use recent swing highs and lows as your stop loss to participate in these trades. Okay, so now coming to the last part. Okay, so coming to the last part of this thing, which is a technical indicator, I would say, uh, called as pivot. So pivots are very simple, right? I don't know why a lot of people don't use it. It is one of the simplest thing what you can use, right? So for intraday, what you can do is you can use pivots as your targets and stop losses. So over here, pivots are calculated based on the historical data of the selected stock. So what you can do, simple thing is you can trade reversals using pivots. What you can do, see, if you see market has taken support over here, right? So this support is acting like a very strong support point for the instrument. What you will do, 18164 is where you buy with a very small stop loss of 18160, just a slightly below this level. Okay, a slightly below this level, if not exactly at this level. You see market made a move up till what, 60 points. You got 60 points over here. You can consider this level as your target, but you know it might be a very far off target. So what you can do, wherever you see a good up move happening in your favor, you can start booking your partial profits. Again, along with that, if you see reversal candles getting formed somewhere around the triggers, somewhere around the pivots, and the moment you see up move happening, then you can participate, right? So you can use pivots as your targets and stop losses for your intraday trades and trade reversals over here, right? Just wait for a reversal to happen, trade the reversal with the stop loss of the pivot itself, right? So S1, S2, S3 becomes your stop losses, R1, R2, R3 becomes your targets, right? So this is how you will typically use pivots to go ahead and participate. Now, the cheat code over here, which I talked about, is you can find out the stock from triggers, use order and trade analytics to identify, you know, a best entry point. Now let's take a very simple example, that let's say Glenmark. Okay, let's take an example of Glen. Okay, what we had identified. Okay, now let's say in Glenmark you want to participate. Okay, so now when will you participate? When you want, when you see that okay, the buyers are getting very aggressive. Now the moment you see that okay, the buyers are getting aggressive in Glenmark, you can go ahead and try to participate. Till then you can wait, right, with these pivots as your targets and stop loss. So you know you can use this entire system, whatever we learned today, one by one as well. Like you can use open interest trading system, completely different, that is also fine. You can use order and trade analytics stand alone as Nifty, Bank Nifty, or any other stock, that is also fine. You can use pivots standalone, that is also fine. You can combine all of them and you can use them, even that is also fine. Trust me, this will give you a lot of trades for your intraday trading. Okay, and again, the entry conditions and exit conditions, they remain the same for every instrument that you that we kind of go ahead and trade. But one thing is, just you need to make sure that the instrument is very liquid. So the cheat code is, there is nothing kind of plain vanilla, or there is nothing kind of a fixed thing that you should follow. Keep your system open, keep your system dynamic. You will get a lot and lot more opportunities for trading. Okay. Also, first sign up. Okay. So the first time you join us, you can use code YTUBE. So naturally, you will get 7 days of free trial the moment you sign up with us for the first time. If you use code YTUBE, you will get a 2 days additional trial of the entire application for you. So don't wait, sign up, grab this opportunity, explore the tools, and be a data driven trader along with us. Thank you so much. See you all in the next video. If you found this video to be useful, do hit the like button, do hit the subscribe button. Thank you.